All right.
Okay, good afternoon, everybody. I'm Robert Blount, and I'm part of this AARP speakers organization. And today, I'm going to go ahead and share a nice little brief with you about financial basics. Let me go ahead and start this from the beginning. Let me share my screen. All right, so today we're going to talk about financial basics for the 50 and plus. And believe it or not, these are financial basics for anybody on a regular basis, but it's always good, no matter what, to take care of your finances at a certain age because retirement's coming. Things are happening in your lives, and these are some good suggestions of things you might want to learn. So I'm looking forward to this discussion today. Now, just to clarify with some ground rules, so everyone can get an opportunity to talk, we can learn from each other. This is a judgment-free zone, and since we're dealing with this on Zoom, try to silence your mics. I know there's a lot of background noises, so it's important to protect against that while we're going through this. You'll have plenty of time to ask questions and talk about it near the end if you have any. All right, a little disclaimer. This session is intended to be informational and educational. It does not constitute an investment in tax or legal advice. I'm not a professional financial advisor legally. We strongly recommend that you seek the advice of a tax or legal and/or financial services professional before making decisions related to any investments or other financial decisions, large or small. AARP is not responsible for the consequences of any decisions or actions taken in reliance upon or as a result of the information provided during this event. Also, I do not represent the legal and political views of the AARP. I'm a volunteer for this particular event. So let's talk a little about this. In this session, we're going to talk about budgeting and setting goals, managing credit and debit, saving and protecting assets from fraud. These are important things to consider when you're dealing with your financial goals and your financial future. Well, the first area is about setting goals. And man, this is the hardest thing for most people to do. We all have goals and aspirations for the kind of life that we want for ourselves. When faced with managing debt, paying bills, it can be hard to see how we will ever get there for a lot of us. So just like a long road trip, you got to achieve the financial future. Your desire requires planning. And what they say sometimes in the military, prior planning prevents bad performance. You plot a course by setting realistic, attainable goals, and then check the map, measuring where you started and where you are now. And of course, how to get where you want to be. Let's talk about a few ways you can help you plot your course. Let's give you some tools that you need to become successful at your financial life. The first thing is, one of the things you might want to figure out from the beginning is net worth. For those of you who may not know what net worth is, this nice simple equation kind of gives you that idea. Assets is what you own that has value. Often that includes your house, your car, cash you have in the bank, your retirements, stocks, savings, bonds, real estate, and collectibles. Those are your assets. The value of your assets minus your liabilities, as in what you owe. That includes things like your mortgage, student loans, auto loans, monthly bills, and credit card debt. Those are all examples of what you owe. Sometimes realistic, for the most part, when you set your net worth, you'll find a lot of times, especially when you're young and around my age, you're in the red. Okay, working on that, trying to get your life started. But at a certain point in your life, figuring out your net worth is important because you need to factor in where you need to go and what you need your net worth to be to make your financial independence a success. If you need to know what your net worth is and you need a nice little tool, you can go to the AARP's net worth calculator. It's found on AARP Money Link. That's actually on our website. We'll show it a little bit later. Now, plotting that course, the next thing we can talk about is budgeting. In addition to calculating your net worth, you also need to set a budget as a starting point towards reaching your goals. And we typically have a sense of how much money we have and what we can afford to spend, but writing down your budget can allow you to see your whole financial picture and decide how to prioritize your expenses. A lot of times people find that budgeting feels like it's limiting, and it makes them feel as if, oh, I just can't do anything. But budgeting is not about limiting yourself. It's about telling your money where to go. It actually gives you a license to spend if you learn to do it. And it's an important and helpful step in reviewing your budget. Identify which items are needs and which are wants. Man, that's the toughest part about it. Good thing is take a piece of paper out, write needs up top on the left side, wants on the right, and just start writing things down. And then you have to determine what's important to you, because they often are personal. A phone can be considered a need to somebody, to one person, and a want in the other side to someone else. So you have to depend on which one is which. The biggest things when you're dealing with needs is taking care of what we call the 4 walls. That is food, clothing, shelter, and transportation. Wants are often things like nice to haves, entertainment, travel, and new clothing. So trying to make those distinctions helps you set up your budget and helps you to provide your goals. Me and my wife do a budget every month, and we actually calculate what we make and how much we're going to pay towards everything, including our debt. So it's always important to sit down and talk about these things to help with the relationship as well. Now, one of the things about credit cards, I'm a firm believer often in, you don't need credit cards, but if you do, here are some things you need to take care of or do if you have credit cards. The first thing you want to do is to shop around for the right card. Get something that has low interest and no annual fees. You don't have to make a payment on it if you don't use it. And always read and understand the fine print. Second is keep track of your purchases. We often spend a lot of time doing micro purchases. We spend it on everything. We go to the coffee shop and we spend it there. Then we go to the grocery store and we see something small, we spend something there. And each time that racks up. Understanding and keeping track of your purchases helps to limit what you spend if you take the time to do so. And it can keep you within your budget that we were talking about just now earlier. Next one is know the finance charge when you carry a balance. The biggest thing is to set up the online access so you always know what's going on with your credit card. Again, we're talking about keeping track of your purchases. You don't wait till the end of the month to find out what purchases you have. You look it up online at least once every other week, a minimum. And know what incentives you're signing up for. A lot of times people get credit cards for things like airplane miles or cash backs on purchases, frequent flyer miles, car rentals, or travel insurance. Just know what type of card that you have and what you're using it for. And if it's something that you don't even have a need for, there's no reason to have that card. People tend to rack up airplane miles, but they never fly anywhere. So just be mindful of those types of things. Here's some don'ts when it comes to credit cards. And these are the things that will keep you successful, and at least keep you better with your financial goals. 1, don't carry a balance if you can avoid it. It's best to pay off the entire balance before the end of the grace period so you don't have to pay interest, because interest is where they get you. So be mindful of that and pay the balance off. That, with the budget, will let you know what you don't need to spend and what you can't. So always protect yourself that way. Don't pay your bills late. We know that with every credit card and with any type of card comes a fee if you don't pay it on time. With any type of debt, be mindful of that, because they can rack up real quick. And they can also harm your credit rating. That's another thing that's going to hurt you there. Spend only as much as you can afford or less. So you have to minimize your spending by living within your means. Use a credit card for purchases under $10. I was talking about this before. The small purchases can always add up fast. So you really want to use cash instead. Let's be real with that one. Last but not least, don't pay for any extras you don't want. Consider asking yourself these 5 questions before paying with credit. Do I really need what I'm buying? Can I pay for this when the bill comes? That's another question. Will I be happy paying for this on credit after the item is gone or the experience is over? Happens a lot of times when people are still paying for the wedding 5 or 6 years from now because they still have it on the credit card. It happens with families. What will it cost if I don't pay in full? How much interest is going to hit me? Again, always keep access to your accounts. And can I afford the monthly payments? If you don't carry a balance, there's no reason for you to have to worry about monthly payments in a sense of paying the minimum payments. So just be mindful of that. Reducing credit card debt. We just talked about using credit cards, and we know that credit is one of the biggest things and biggest issues here we face in America on a regular basis. And if you find yourself overwhelmed by credit card debt, despite your best intentions, don't give up. And there are things you can do to help yourself get out of the situation. One of them is switch to cash or reloadable prepaid debit card. Trust me, you switching to cash will limit what you spend, and it'll hurt a little bit more. So it's there have been reports, not necessarily reports, but there's areas that say that when people spend cash, they feel it and they lose it. And it also means they learn how to keep and less spending. When you spend with cards, you tend to spend more because it doesn't feel like you're losing anything. So switching to cash makes sense. Or reloadable prepaid debit card. Why? When it's gone, it's gone. There's no reason for you to spend any more. You're not going to spend more money than you have to because you don't have the money to spend. Look at the balances and interest for each card and make a plan to chip away what you owe. Make a plan to pay off based on balances and interest rates. There are two different ways they often promote out there on a regular basis. One is to always go for the highest interest rate first. The other plan is to pay from smallest to largest. One takes into account math, but the other one takes into account the human factor. We need to be successful at something. Paying out the smallest to largest also helps you in that area. So either way that you take it, understand, make a plan to pay off your balances, pay off your debt. If you need help, and we do have some, go to www.nfcc.org. It can give you some information when it comes to paying off your debt. But there's some things here in a minute that you should not do. Well, we'll talk about the next portion of reducing credit card debt. Get out of the red as quickly as possible, as they say. Credit reports and scores. One of the costs of debt is the effect it can have on a person's ability to get credit. Paying down debt can help improve your credit and credit scores. So when you're talking about credit reports, equals a history of payments and overdue debt, if you have any. Your credit score is a number that helps lenders determine your credit worthiness. For the credit report, it also includes current balances, outstanding debts, the amount of available credit you have, your public records, and inquiries about your credit from various companies. Your credit score, as we just said, is a number that helps lenders determine your credit worthiness. Lenders, credit card companies, employers, and landlords will typically review your credit report and score to determine if they should trust you with credit. By the way, if you don't have credit, there are other ways to still gain the exact same resources for that to imagine. A better credit score can make a big difference in your life. Why is all this important? Check your credit. Getanannualcreditreport.com. Although this isn't the only particular type of item you want to use, there are other types of apps that you could use to check your credit on a regular basis, such as Credit Karma. You can download it on your phone and actually check your credit every day and all throughout the month. And it changes about every 6 days. So it helps you keep track of your credit. This right here gives you a full credit report through all 3 main credit reporting agencies: Experian, Equifax, and TransUnion. Now, Credit Karma gives you both Experian and Equifax. It also gives you a score. Annual credit report does not give you a score. In today's world, most of your banks and credit card companies also offer credit checks, credit checks as well. So, and they often give it to you free for just having the account. But just be mindful, always keep a look at your credit. This is something you probably want to do nowadays in this day and age, at least once a month, not once a year. To make sure you're not seeing fraud, and more importantly, that they're treating your credit report like they should be. Let's move forward. Here's how you read your credit report. the first things you want to look at is your personal information correct. That means your name, your first and your last name, and middle initial. You'd be surprised. In my credit report, somebody had messed up my first name and called me Roger. I had to have it fixed. It took a little while, and I had to send some information out. So it's always important to make sure you check to make sure your information is correct. I also had one where it told me my birthday was 3 years earlier than my own person. Make sure your information is correct. Do credit accounts belong to you? That's the next question you have to ask. Does it reflect your payment history? So that's something you need to look at. And last, are the public records yours? When we're talking about public records, we're talking about tax liens and foreclosures, those types of things. So those are important things you need to look for in your credit report. Here's ways you can actually improve your credit score. We're all familiar with what we call the FICO score, and it's what most lenders use, and its range is somewhere from 300 to 850 for basic scores, they call it. Sometimes the industry has 250 to 900. The higher is better. So the two best things you can do to improve your credit score, if that's what you want to do, pay your bills on time. They keep a record every time you make sure you pay your bills month to month, and keep your credit balances low. Unfortunately, to make a credit score, you have to keep something on your credit. So just be mindful of that. If you don't, it will be lower. And if you have no interest in it, that's something you don't have to worry about. But if you want to keep your credit cards balanced, then you have to keep anything from 30% or less on your credit card to really balance out what they're looking for when it comes to your credit balances. So taking charge, if you find yourself in a debt crisis, here's some things you need to do. Ask your creditors for more favorable lending terms. Things like, and people don't think about this when they first have a crisis, lower your minimum monthly payments. If your minimum payment is lowered, it may take you longer to pay down the debt, resulting in more finance charges in the long run, but it may be necessary to prevent a short-term crisis like your utilities being cut off. Avoid debt relief companies. Those guys will continue to steal your money, and they will trash your credit. The one thing about them also is that it takes them so long to do it. And for a lot of people who live by the credit score, this doesn't help them in the long run. It takes quite a while to do so. Contact the National Foundation for Credit Counseling to access a reputable source. Next is protect your financial assets. While you're in a credit crisis, avoid services that claim they can eliminate debt or fix a credit score. Guys, eliminate debt sounds so fantastic, but let's be real. It doesn't. Something's got to go somewhere. Somebody has to do something to make it happen. And a lot of times that's going to be you. So you'll spend a lot of money for these alleged services and may end up in a worse credit situation. We just talked about credit. We talked about trying to get away from using credit cards or finding a way to make sure that you protect yourself from things. Here's some things you need to do in that budget that can help you with saving money. The first thing is, even if your income is fixed or feeling like you're simply living paycheck to paycheck, by spending wisely, targeting debt, and avoiding unnecessary fees, you're saving money. So everyone can save something regardless of their current financial situation. Every dollar you don't spend is money you're saving for yourself or for your loved ones, weeks, months, and even years from now. We're all often saving for our retirements. We're often saving to leave assets to our family. And these are important things we need to work at, but cost cutting is absolutely one of the few things we have to do in our budget process in order to make that easier. To do that, the first thing you need to worry about is spending priorities. One phrase that always pops out in most personal finance is pay yourself first. Whenever possible, setting aside money in advance for emergencies or retirement savings is critical, and not at the risk of defaulting on your bills. So you should consider addressing your immediate essential needs and debts first. Again, what we call the 4 walls. That is your food, clothing, shelter, transportation. After that, you're working with high interest debt, things that you need to take care of. And that is credit cards, loans. You have emergency savings that you need to take care of as well. It's something we all need to save at least several months in case something does occur. As we all know, we're living in the coronavirus times, and unfortunately, many people lost their jobs, and many people didn't have savings. They ran into a massive influx where people were struggling to keep up making payments on their homes, making payments on their debts, as well as their normal bills and everyday expenses. So it's important for us to always make sure we have at least emergency savings if we can. Number 4, retirement. For many of you, that may be closer to it than others, but working towards a retirement, saving your money, working on retirement goals, and other goals that you desire. Once you go through the first 4, other goals are things you can cash flow, things you can save money for, such as fixing up your kitchen or buying another car, a newer car, things like that. These are your spending priorities. There are 2 things, though, that you should avoid, and they'll tell you to avoid it at all costs unless you're having some major financial difficulty. The first one is tapping retirement funds early. The taxes on them, and even currently in the coronavirus times, they have gone back on the tax or the penalties for early withdrawal on most 401ks, but that's still not a reason for you to draw from it, because you still got to pay tax on those funds that you draw from your 401k, your retirement accounts. So tapping your retirement funds, tapping your future in a sense, to pay for today is not a good idea. The only time to really do that, as some would say, is to avoid bankruptcy or foreclosure. And the next one is claiming Social Security early. Many of you are maybe getting close to that age, or maybe up to it. If you file for benefits before you reach full retirement age, the amount you receive will be permanently reduced. But if you wait past full retirement age, you can earn an additional 8% in your benefits. Now understand, up until the age of 70. For a lot of people, this is not an option, okay? But it can be for you, and it's really worth closely considering. But if you don't need it, it'd probably be a good idea to pull it early if you're gonna do invest it. We'll talk about investing a little bit later. So here's some places where you want to save money, okay? Some of the better places to save it is savings money in a savings accounts, so money market accounts. It's one of the safest places to keep your money. The interest is low, and your money has little chance to grow. But the whole purpose of having that type of account is for in case of. So it's very liquidable, easily accessed. Let's say your car breaks down, you need a car fast. Guess what? You have a savings account that you can access when you need to make that happen. Next, we're talking about certificates of deposit. Those are anywhere from 1 month to 10 years. And these certificates of deposit, they have a fixed interest rate and much higher than what you'll find in savings. Not enough to beat the market or even beat inflation, but you can make some money off it. It's a long-term goal. The money placed in a CD matures, or it earns interest until the specified time range is over. The penalty fees are typically charged for cashing in a CD before its maturity date. So you will lose interest if you take the money out before the CD has matured. So these vehicles are best for money you don't plan to access for a while. And those are not good for savings accounts. Let's talk about U.S. savings bonds. The savings products issued guaranteed by the U.S. government. The savings bonds are low-risk saving options, and you can purchase them online at treasurydirect.gov. Now, those are all options for you to park your money, but if you want your money to work for you, you're going to have to invest it. So one of the things to invest in is your investment accounts. They typically invest in things like stocks and bonds, which have a highest potential for growth, but also carry substantial risk. Any investment in the stock market, including mutual funds, that includes stocks and bonds, is subject to market volatility and can cause investments to drop or gain value unpredictably. So you're going to have to deal with the fact that when you do invest, there is a chance you could lose some of the value of what you invested. That doesn't necessarily, depending on what you invested in, doesn't mean you lose all. Mutual funds are one of the great investment tools because they have you, when you invest in them to multiple companies, multiple organizations, not one. So your money going into that is actually being spread out. So if one company goes down in that mutual fund, that's not going to take everything away from you. You're not keeping all your eggs in one basket. So it's important to understand that. Next, we have 401ks. These are your retirements, which retirement plans that you often have at work. Now, understand the retirement is simply a parking vehicle where you actually put money at for your retirement. And often it's easiest to do because it's automatic payroll deductions. So you never see it. It's a great way to save money. Understand that most 401ks are attached to mutual funds. So they help. They can actually make your interest and you can make money and have your money work for you inside of 401ks, depending on the funds that you choose. Then you have your individual retirement account. If you have one, or you are self-insured, or you have a job that requires you to sit there and do, or you have a job that you own, such as a lawyer, an IRA is an option for retirement savings if you don't have access to a 401k type plan. They offer tax advantage savings, but the amount you can save in them is a lot lower than a 401k. So they haven't talked here about other types of IRAs, such as Roths, with our after-tax IRAs. But those are good accounts to use, and they're also tied to mutual funds, and they help you save money for retirement. These are some things you might want to look into. Again, go to a financial advisor in details on what these items can help you with, depending on the goals and the budget that you set for yourself. So savings versus investing. The term savings are often used interchangeably. Savings and investing are often used interchangeably, but there are differences between the two. Savings puts aside money for emergencies. There are specific purchases in the near future and implies you will keep your money in a safe, insured account. That's what most people do. FDIC approved. FDIC insured, right? That's what most banks offer. Investing, on the other hand, focuses on increasing net worth and achieving a long-term financial goal. Investing involves risk. It does have the potential loss of value and is to be considered after you have adequate savings. So you don't invest your emergency fund. You invest after what you have. You don't. So that's one thing to consider when dealing with investing versus savings. Savings are meant to help you currently in the short-term goals. Investing is something you want to deal with on a long-term span, depending on what you're doing. As you can see, investing involves risk, it's volatile in short time periods, and offers higher potential for return. And it's for mid to long-term goals, more than 5 years. Anything 5 years and lower probably needs to go into a savings account, depending on your goals. Now we've talked about savings, we talked about debt, we talked about setting up budgeting, but the one thing we have to be careful with always is protect yourself. In today's world, even thanks to the coronavirus and many areas we're dealing with, the criminals are still out there, and they're doing a lot to try to take your money and to leave you broke, depending on where you are in your life. They want to make sure they can make money off of you. And you have to be careful in what you put your trust in. So the first thing, here are the few things you want to watch out for. Always watch out for requests for your Social Security number. Those are personal. Be particularly vigilant with that. Only share it when you're communicating with someone you know and trust, and never send it in an email or a text message. Not a good idea to send that information out. Those devices can be hacked. Sharing account numbers. Be cautious about sharing bank account and credit card numbers. There are occasions where this is necessary when making online purchases through a reputable source, for instance, but use caution. They offer so make sure you watch your account numbers and always be careful with them, whether it's credit or debit. They work just fine against fraudulent purchases. We talked about before, always take a look at your transactions in your accounts. Always keep those in mind. Take a look at them at least several times a month to verify what you purchased and what you haven't. Be careful with the something for nothing offers. The old adage, if it sounds too good to be true, it probably is, applies to almost any offer for free prizes or drastic discounts. Things such as the Nigerian prince who is supposed to give you a lot of money to help send his money over here, and he's going to give you a portion of it. And people send money to him. Those types of scams are still happening today. There are scams right now going on with the coronavirus, and people may not have gotten their money from the government, and they've gotten an email from scammers saying, hey, we'll help you get your money, but you got to pay us this. So be mindful of those types of scams. The next one is the act now. Many companies, some reputable, many not, use a false sense of urgency to get you to act without thinking. Don't let a phrase like, don't let this opportunity pass you by, hook you into making rush judgments. One of the biggest things that's gotten a lot of people over the years is timeshares, and they do that quite a bit. Very, very forceful, very, very quick, and they're very nice people. Problem is, they often push you, like they give you things, and they use this type of act. So be careful. Only make decisions when you can relax and you can think. Don't let them push you to make a decision by trying to urge you into it because, oh, you got a time constraint on you. That's the one thing they will always try to catch you with. And last is the catch. Always be on the lookout for the catch that explains why a deal that seems too good to be true is just that. Even legitimate businesses operate legally can cause severe trauma. So-called, we're familiar with payday lenders. For instance, will lend money to people legally, but at an exorbitant interest rate, sometimes anywhere from 15, 21 to 25%. Rates that can quickly snowball into a huge financial burden. So be mindful of that. Try not to get yourself in that situation and make sure you ask for help from somebody you can trust. Now, we just talked about a lot of things that can occur to you. Let's talk about a few others that can. Protect yourself from identity theft. Be aware of how information is stolen. Okay, we all heard about the major data breaches such as Equifax that exposed personally identifiable information, or PII, of more than 140 million Americans. Just because your data may have been exposed does not automatically mean you're a victim of identity theft. But these kinds of breaches make it that much more important that we vigilantly watch your various financial accounts for suspicious activity, and that we order a free credit report each year at annualcreditreport.com, or once again, using Credit Karma on your phone as an app, which has accessibility as long as you have a smartphone. Can you protect yourself? Absolutely, and here are some ways you can do that. So be aware of how information is stolen, phony change of address forms, diverting your billing statements to another location. Scams also can use false pretexts to obtain your personal information from banks, telephone companies, and sources, and they're getting better at this. Guard your personal and account information. That means shredding your documents and paperwork. If you don't have a shredder, they're not as expensive as they used to be, and Amazon has some anywhere from 25 to 50 bucks. It's something to have. When you get the mail that mail that comes in the mail, if you will, that's asking for you for credit cards and things like that, and any documents that you don't need, it's best to shred them versus putting them in the trash. Criminals do go through your trash. It has happened plenty of time, and they'll find information that they need to impersonate you in order to gain your benefits in some form or fashion. So don't give out personal information on the phone, through the mail, or over the internet unless you made the initial contact and know who you're dealing with. Last, report suspicious activity immediately. That's one of the things that is a good thing to do. Try to report it. If you see something suspicious on your account, it's a good idea to report it to your company immediately. Don't wait to see what it is. Next, about protecting your assets, do your homework. It's usually only takes a few minutes to check up on an unfamiliar company or a source. They have a scam going where somebody has called in and said, hey, your son is stuck in jail, such and such, and we need money to get them out. Can you wire us something? These things do happen. And it's important for us to stop, think about it, hang the phone up first, and call your son or your significant loved one that they're talking about. That scam has been happening for years, but it happens so often and people fall for it. The scammers are going to do this as much as they can. even with businesses, a phone call to a Better Business Bureau or a quick internet search can go a long way toward saving a massive financial headache. Ask questions. It's your money and your personal information, so you owe it to yourself to ask tough questions, as many as you can think of. And take your time. Any decision worth making, worth taking the time to make it right. Don't be bullied into rushing decisions. Do your research, ask questions, and understand what you're being asked and why. And then last but not least, and this is the hardest one for most people, ask for help. There are many reputable sources of assistance out there that can be found using the resources in your hand. If you need help with your financial affairs, consider a licensed, bonded, independent third party to provide assistance. A lot of times, that might be a lawyer or financial advisor. These people are often can help you to make those decisions. So we've talked about everything from dealing with budgets to everything else, but the secret of getting ahead is getting started. I can throw all this information at you. I can give you all the details, but until you sit down, you have to start with the process of setting a goal. Next, know your net worth, where you are right now. That's important because that helps you create a budget to set the goal to go where you want to go. Regularly review your credit reports because of fraud and because of what you need to pay off, things that may end up on there that you may have forgotten. Manage your debt. If you can get rid of it, that's even better. And build your savings. Whether it's for emergencies on the savings for retirement. Build your savings. These are things you need to deal with on a regular daily basis. Make a plan to build your savings. Here's some additional resources you can access. You can go to AARP and go to AARP website, and you'll have a lot of information about what we're talking about when it comes to consumer protection, living on a budget, managing debt, saving and investing, as well as taxes. Once again, I am not a professional. I am not an investment advisor or financial advisor, if you will, but it's important to understand that a lot of this stuff is what we all need to learn on a regular basis. Go to aarp.org/money, which is, and there you'll find out about the articles and tips and videos and quizzes and calculators to help you plan for your future. Again, that's aarp.org/money. Thank you for joining us today. If you have any questions, please send a message. I'll be happy to answer them for you.
Mr. Blount, do you want to stop sharing your screen?
Sorry.
That's okay, just for your privacy.
I didn't even realize I was still doing it. Hold on a second. Let me.
Okay.
There we go.
There we go. Thank you.
Thank you very much. All right.
So, Elizabeth or Judy, do you all have any questions or comments for Mr. Blount today?
No, it's good information.
Thank you.
Especially about the scammers, because my mother's passed, but before she passed, she did fall prey to these scams, and my brother had to end up pretty much taking over her finances because she was in early stages of dementia. So that is something that everybody needs to pay attention to.
I'm glad she had somebody she could trust.
You gave some good websites for your information. That's always helpful. So, you can start with an idea and then you can take it further.
I'm sorry, ma'am. I think you're kind of far back from your mic. We can't.
Oh, okay. I said it's good that you put some websites on there. You can get some information and then you can take it further and look into something, more details. So I always think that's a good idea. And I appreciated how you organized everything, looking at, across the water board. A lot of good stuff. Thank you.
Thank you. Appreciate it.
Okay. Anybody else have thank you for the kind comments. And I do want to thank Mr. Blount for taking time out of his day to share this information with us. Does anyone have any questions for Mr. Blount regarding anything that he did in his presentation? Any questions you'd like answered? All right. Well, we thank you for attending.
I do.
Oh,
I
yes,
do.
Ms. Ward. Yes, Ms. Ward.
In terms of insurance, for those of us who are closely coming up on retirement age, what should be some of the considerations that we take into as we look to our insurance package for ourselves?
Okay. Now this is just some information I could possibly give to you, and I'd love to ask you some more questions about it. But for one thing, I would first take a look at where your net worth is right now, and that would determine if you actually need it. One of the things about it is if you got nobody else depending on but your family member, and you do have some extra debt, it might be good to have enough insurance, term insurance, to cover what you have left in case of something happening to you. That way, your significant other can deal if you happen in a place where something does happen to you. Another thing is, and this is what it says, at 60, it's a good idea to start thinking into long-term care insurance. So that, because at the end of the day, that's something that Americans, and the more you age, the chances of that actually occurring. So at the age of 60, it's probably a good idea to start looking into long-term care insurance. It's not an expensive thing, but it's looking at something you want to budget for on a regular basis. Are we talking about anything else when it comes to that?
No, just looking at, because the cost of whole life, once you hit a certain age, is no longer cost effective. So, in terms of mix of whole life to term, maybe universal, or even looking at doing annuities instead. So
that's okay. I'm glad you gave me a little more specificity. I would, okay, I actually am an insurance agent. I'd probably tell you, if you still need life insurance, I would say you want to go for term, because you're not saving your money there. You want your retirement in that particular setup. Now, annuities are nice, but fixed annuities don't make any actual expenses, and they tend to limit you. At your age, it may be a good idea to probably find something that's going to give you some actual growth, and that are indexed annuities. But I'm not gonna cover all that because I'm not actually a securities agent, so I can't tell you that one. That one you need to talk to an actual securities agent who actually has a little more control of that. I do know it's best to have term insurance in case of your need. Yes, ma'am.
To keep life insurance as you get older, like at what point do you decide you don't need it?
Elizabeth, we can't hear you. I think you might be a little bit too far back from your microphone. Could you say again?
Some problems sometimes because,
And I think she's bringing up something about life insurance. You're right. You tend to keep
yes,
what you.
how long do you think that a person needs to keep life insurance?
I think a person needs to keep life insurance as long as they have they don't have enough liquidable assets to take care of some of the basic needs when they're gone. Once you have nobody else depending on what you have, and you have an assets, depending on how far you've gone with your career or your life and your investments, there's no need for it. Especially, let's say if you have, I'm gonna give an example. Let's say you have $400,000 to $500,000 in your retirement portfolio. Your house is paid for, your cars are paid for, many of those things are working on you, and your kids are off and they've already moved on. Do you actually need life insurance at that point? Depends on the standard of living you want your loved one to have. But if they can live pretty well off of what you already have, there's no reason to have it anymore. That's why I'm not a fan of whole life in that, because there's no point in having insurance for your whole life. You want to have it for as long as you need it until you have the liquidable assets to have it. Now, I'm gonna give this disclaimer. Do not let go of your life insurance if you have health issues. Please do not do it, because you're gonna have a hard time getting insured and you got at another company. So if you have bad health issues, don't let it go unless you have enough liquid assets to cover any other problems that you may have, or cover your debt as well as everything else you have, and they're not dependent on you. So when you're young, you need insurance if you have a family and you have kids. Older you get, if you have the money saved and you don't have as much debt, you should not need insurance quite as much. Did that answer your question, or did you want something more specific? Ms. Beck?
I'm sorry,
You're too far back from the mic.
Oh, okay. Yes, that was helpful. Thank you.
Okay. I was hoping I can help you with that right there. If you have any other questions of me, at least when it comes to insurance, again, I'm not a securities agent, but I can talk to you when it comes to insurance. I can leave my email. You can send me an email if you have any other questions.
Yes, and I'd like to direct everyone to the chat. If you, does everybody know how to access the chat? There should be a bar at the bottom of your screen. And if you click on chat, it will bring it up on the right-hand side of your screen. And one of the things I've included over there is a link to a survey, if people wouldn't mind taking that survey at the end of the program. It's something that I've been asked to do as an adult programmer on behalf of the Central Arkansas Library System. We're trying to make sure that the programs we offer are useful to people. And so, you know, it's just a short survey. I also put in there the name of a financial planner if anybody is interested. That's just one place to start. This, you know, that's just one that I know of, that I know that he is, you know, he's certified, and I know that he does a good job, but there's lots of other people out there. And then the third thing is that Mr. Blount has put in his email, that if anybody wants to have that and you'd like to email him further, he's kindly offered to field any questions by email as well. So does anybody else have anything else today? Okay, well, we will say goodbye then. And Mr. Blount, we thank you very much for your time and for an excellent presentation. I have a degree in business. One of my degrees is in business, and I learned a lot. So, you know, just go show, you know, you're never too old to learn. So we thank you for that. Thank you for your time. And we thank the participants for attending and for asking such good questions. So I hope everybody has a great day. And again, if you wouldn't mind the little survey, we would appreciate it. Thank you so much.
Y'all have a wonderful night.
Y'all too. Bye-bye.
Bye-bye.
I don't think we've ever